The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the March 5th, terrific Thursday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that each of you are off to a great start of your day. Let's make sure that you and I, that we do everything we can to have a terrific Thursday. Of course, the easiest way to do that is to always remember that what's talked about is a dream, what's envisioned is exciting. Of course, what's planned becomes possible, what's scheduled is real. And I really want to thank you for scheduling your time with me here this morning. I'm honored by your presence. I'm here to serve you. Feel free to pick up that phone and call in at 877-927-6648. Of course, internationally, you can call in at 727-445-1044. That way, you and I, we can go answer all the questions in the world. We can go put the pieces of the puzzle together. Remember, if you've got a question, someone else has got that exact same question. So go ahead, a little random act of kindness. Call in for somebody else. Of course, this is Terrific Thursday. None other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 47 points, trading out at 18,144. S&P up 4.5, trading at 2103. Composite up 22 points at 49.89. Russell 2000 up 3.5 points at 12.34. The DAX is up 113 points. The FTSE's up 43. Gold is flat, trading out at 1201 and change. Silver is up 6 pennies at 16.22. Light sweet crude is back 34 cents. Leading the charge, the upside. You've got Puma Biotech up 12, Priceline's up $11, Recepto's up 9, Biogen up 9, Regeneron Pharmaceuticals up 7. To the downside, we've got Embraer, SA off about 11%, down 370. You've got Grief is having a whole lot of grief this morning. GEF is the ticker symbol. That is down about 9%, off 375. Joy Globa down a couple of bucks. Ambarella off about $1.70. I think that was moving upside yesterday, downside today. You've got Restaurant Brands down about 4%. Again, our call number 877-927-6648. Let's go try to figure out what all this means at 10:10 a.m. on March the 5th. Let's start off. Let's go take a look at what's going on inside of the markets by looking at the New York Stock Exchange, the composite, and the Dow. Let's start with the Dow first. We take a look at the Dow. Right now, what we can see here is that the bears, the sellers, actually, I don't know, we'll call them bears, bulls and bears. So, it's appropriate to do so. But it's the sellers that still are in control of the Dow, even though it's seen a bit of a bounce here. Price oscillator is below the zero line. The bulls, the buyers, don't take control until we see that thing get above zero. It is not above zero. What we have at this stage here is sellers still in control of the Dow. If we take a look at the composite, yesterday, the composite dipping. Now, all these numbers or everything that we take a look at, it requires end of the day data. Intraday data just lets us know, hey, where we are at with regard to buyers and sellers, who's in control. In the case of the NASDAQ composite, which does have the strength and the energy and the ability to go ahead and pull all markets higher, or at least stall them from any kind of a tumble, or to begin setting up the next leg up in the markets, it is most certainly the composite. Now, yesterday, sellers took control. They did that by being able to get the price oscillator down below the zero line. It's just slightly above it here this morning. So we'll see how this ends the day. So we got a little bit of divergence between two markets. Let's go take a look at the composite. You've got about, 2,500, 3,000 equities that are trading. Same thing, maybe a few more inside the New York Stock Exchange out here. New York Stock Exchange price oscillator still below zero. Now that changes today. What was the number? I think I got the number written down on this pad of paper here. The number is 977 net advancing issues would be needed in order for the New York Stock Exchange to get its price oscillator back up above zero. Now, it's a real possibility We get the New York Stock Exchange to close strong today, to get its price oscillator up above zero. And obviously, at that, I would assume that if that's the case, then you're going to see the same thing really taking place inside the composite. Then, to a certain extent, I don't even care if the Dow is down below that zero line. It would actually be saying that yesterday could have been a low. Now, the reason I say that inside the NYSE is because yesterday's move down in it, by the end of the day, it formed a hammer candle out there. Now, that alone, now it's a reversal signal. It's something to pay attention to. If I go to try to find all the different hammer candles inside of the New York Stock Exchange, I guess the one that I see here on my chart most recently, now this is not where something came from below the zero line, but the last hammer was out here on November 4th as well. No, there was one on November 4th. There certainly was one out here on December the 9th out here as well. We saw when we saw price close below that led and communicated to us going to lower price out here. So right now today, still as we speak right now, just because it was a hammer candle doesn't mean that that was a bottom or anything. It just means we got to pay attention to it. You've got to pay attention to the message of the markets. And today, if we see 977 or more net advancing issues, it says you go visit the highs again, most likely, and because you'd have the New York Stock Exchange and the composite, the wider swaths of the market, saying, the sellers just aren't there. They don't have the oomph in order to be able to push the markets lower. So we'll see how that what that looks like. Well, I won't be able to see what that looks like with you at the end of the day, but we'll certainly look at that come tomorrow morning. So that's what's going on in essence in a more global sense with regard to those markets. We go take a look at the ETF structures just to see what's happening inside of the QQQ ETF out here. You've got the Qs that are trading out at 108.94. They were up a total of 49 cents with 3.8 million shares as we speak so far this morning. The swing point high here for the Qs was from a few trading sessions ago, March the 2nd, that had 22 million shares out there. This should keep track of what the average volume is at about 10:15 each morning inside of these ETFs, because they certainly drop off during the day out here. Nonetheless, there's really no reversal signals inside of the QQQ ETF out here. Yesterday, we saw price get down and test the bottom of its market profile, or get very close to testing the bottom of its market profile. Today, you're up above that level, that which could be a resistance area, which is 108.58. If you stay above that, that bodes well. If you, whether you take out the high or not, if you can garner more than 22 million shares, 23 million shares today, that says you go test 109.42. If you do more than that, you don't really need to worry about taking that that candle session out with volume, because there's already confirmed A to B equals CD to the upside inside of the Qs. And that A to B equals CD to the upside says that eventually the Qs want to make their way up into the price level of about 115.36. That would be your 1-to-1 A to B equals CD. So now we're just really kind of semantics here by saying that we're going to pay attention to a candle session from a few days ago. The B point, the most important swing inside of the QQQ ETF, that took place on November 28th, the day after Thanksgiving. And that swing point was passed with volume out here. So for the sellers to get happy, they need to see it close below 107.76. The buyers, they can just remain in that happy stage that they should be at inside of the QQQ ETF. If we take a look at the Russell 2000, the IWM's got 4.7 million shares. It's up 48 cents as we speak right now. What do we know about the IWM? Yesterday, it didn't make it all the way down to the bottom of its market profile low out here, which would have been 121.39. We're just trading with inside that range as we speak right now. If we take a look at the swing point from March the 2nd, that had 29 million shares. You've done about 5 million shares today. So volume seems to be pretty decent. Inside of the IWM, any close above 123.11 today would suggest a test of the high of 123.78. As long as and even if it doesn't get above 123.11, if in fact it can close with more than 29 million shares, says you would go up and test that high. Yesterday's volume on the pullback, 22 million shares out there, so kind of a light volume retracement inside of the IWM. No serious damage inside of the IWM occurs until price were to drop below 120.58. We look at the SPYs out here. SPY's up 46 cents with 13 million shares trading out at 210.72. If we take a look at the SPY out here, as I look at this candle here, that is a hammer candle as well inside of the SPY. This yesterday did get down and test that market profile low. Let me go ahead and get rid of this just to clean up the chart for you so you can see it. And so if we take a look at what TAS market profile box that it's trading in, that low being 209.06. I'm sorry, 209.08. It got down to 209.06 yesterday. Right now, the SPY's just hanging out near that point of control, that area where both buyers and sellers are most comfortable with transacting business. In order for the SPY's to get bearish, so to speak, or just suggest really more retracement is to come, you need to see it close below 209.08. Otherwise, right now, all you've got is just kind of a sideways, neutral to a bullish move on it. Of course, the SPY's, I think they also have a confirmed A to B equals CD to the upside. I would be using the swing point here from December the 5th, which had 91 million shares, and price got above that with 97 million shares back on December the 12th. So you've got a confirmed A to B equals CD to the upside inside of the SPY. So everything else, excuse me, that we're looking at right now is just more a matter of semantics than it is really anything else. If we go take a look and finish this off by looking at the Dow Diamonds here, you've got the Diamonds up 48 cents, 514,000 shares. The Dow Diamonds also traded inside their market profiles out here. Resistance being 182.24 and support being 179.62. Right now we've got the Dow. It's up about 48 points. The S&P is up 4. This is Steve Rhodes with TFNN. We'll be right back, folks.
To follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 42 right now. S&P is up 3. Composites up 19 points. I have a request here to take a look at ticker symbol CYBR. That is the CyberArk Software Limited. Now, this is an IPO. Comes out long and strong. This is on September 24, 2014. Traded as low as $22.12, as high as $30.19 out there. Trades sideways for a period of a couple of maybe a month or so, up until November the 13th, maybe a little bit more than a month. November the 13th, all of a sudden there's a sign of strength out there and there's a gap. Now the question is, let me do this here. Let me come back to the chart. Let's clean this up just a tad here for a moment. Okay. So now as we take a look at this chart, because the question is, Steve, can you look at CyberArk for a long? So we don't have a lot of data out here, because what we're looking for, you and I are just attempting to be pattern recognition specialists. So we're looking for patterns, because patterns will typically repeat. They repeat in human beings all the time. And they repeat, and the stock chart is nothing more than a group of human beings, right? Well, sometimes it's human doings versus human beings. It's always better to be a human being out there. Most folks get stuck in the role of being a human doing all the time. All right, enough of that. Well, we can talk about that for hours if you'd like. Now let's take a look at, let me try to answer this question here with regard to CyberArk. So this gaps up with a sign of strength out here with 11.5 million shares on November 13th. Now, if we take a look at that level of support, your level of support is where the breakout took place, and that's going to be that candle session from November the 12th, and that price point was $33. Now, what CyberArk eventually did, since it's an IPO, I will have to assume that somebody looking to get into this equity is looking at this from a longer-term perspective. Maybe that's not the case. Let's just take a look at what CyberArk has at least done once out here, and that is that it came back to the breakout area. Now, in this case, it came all the way back to the bottom of the breakout area, which was the low of November 12th. That also had 2.4 million shares, and you were coming back into that candle with a really light volume, 575, 292. So forget about the breakout volume of 11.5 million shares. This thing came back into that candle session with a light volume. That was the first buy point. So now if we take a look at CyberArk and where we're at right now, this thing gapped up recently on February 12th out here, and it gapped up with volume of about 7 million shares, and then it actually made a high out here with 6 million shares. Now, it's not making the high with 6 million shares that I think is important for us to pay attention to in the case of CyberArk. What's important is to look at what happened on the next session on February 23rd. I don't know what was behind the move, but it had volume off of the highs. Little bear sash candle, volume off of the highs, nearly 11 million shares. That says to me that what CyberArk should at least do is come back and at least test the breakout area. Now, Is it the February 13th low, which is a price point of 52.30, or is it the prior day's high, which is February 12th, and that's at 45.99, or is it even the low of February 12th, which is 41.30? Because the first time that this broke out, price came back and tested the low of that breakout session. So the answer to your question would be, let this come back first to 52.30. See what happens. See if volume is drying up. See if it tests that level a few times and rejects it. If it does, don't worry about the gap getting filled. I mean, you've always got to worry about everything, but don't worry about it until it happens. Instead, look for 2 or 3 tests of that area, and if it holds and volume is dissipating, then you could go ahead and begin building a position, knowing that if price closes down below 52.30, that there's no reason that it can't touch the 45.69 or the 41.30 area out there. But you do have that volume off of the highs that just says, hey, this really ought to, and it may take a while, right? It took quite a while for CyberArk, because CyberArk had gapped up on November 13th, and it took all the way until January 29th, so that's quite a bit of number of trading sessions for it to come back and test that level. And with this much data, or this lack of data in this chart, that is the best thing that I can tell you with regard to CyberArk. Now, if we take a look at retracements as well, those retracements being from low to high, there are a few more things I'll give to you. Low to high, at that gap, at that breakout gap, that's also your 0.382 retracement level. So that's at that, that price point of 52.30 also is your dead cat bounce, your 0.382 retracement. There's one other thing we can put on our charts out here, and that happens to be the TAS market profiles. Now, this suggests that price could pull back to about 49.15. I would say if it gets into the gap, it ought to go test that 45.69-ish type area out there. So I hope that helps J&J in our Tiger's Den. This is Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 56, S&P's up 5 points. Have a request here to go take a look at the 120-minute chart that I showed on the ES yesterday. So as price was moving down, we took a look at this chart here. And what I pointed out to everyone was that as price was making its high out here, this is back on February 25th at about 2 p.m., made that seventh inning wave stretch pattern to the upside. So it made that G count. Also did it with less relative strength out there. And then we got a nice little bearish reversal signal. That set up, at least at this stage here, at least the short-term top. Now, on our counts on the way down, as the market was moving lower yesterday morning at the 10:30 time frame, what I pointed out was we also happened to have our seventh inning stretch pattern to the downside, that little G count to the downside. We had a couple of different things that were taking place at that stage. You had an A to B equals CD to the downside. If we take a look at that, that looked like this. Right there, so it made your 1-to-1 A to B equals CD. That had a price projection of 2087.25. So you had that. You had a seventh inning stretch pattern to the downside, and this little descending price channel, which I had drawn in probably back around the March 1st, February 27th time frame. Price broke through that at 10 a.m. on the morning of March the 1st out there. Price breaks out, comes back, tests it, rejects it. Well, price got back into it, tested the bottom of that price channel here yesterday. Right now, as we speak, if we take a look at this, price is trying to break above its TAS market profile high. That's priced out at 2100.50. You're at 2101.50. This level here, I need to adjust this here, 2099 is also a very important hurdle. And as long as 2099 acts as support, then what you should expect is you should expect higher prices inside of the ES Mini. How much higher, I'm not sure. Let's go take a look at some retracements. I'm going to go ahead and get rid of that descending price channel. I don't need that anymore. So there's the update for that chart, but now I want to give you the potential retracements, but it's going to be easier for me to do that by just switching back to this series right here. So where's my 120-minute chart? Okay, so now we're back at the 120-minute chart out here, which had, oh, that's the NQ. So wondering why does that have different TAS market profile box out there. Okay, so now we've got the 120-minute time frame chart. Now, if we just simply take a look at the retracement high out here from 2 p.m. between 2 and 4 on March the 2nd. Oh, come on. And we go down to yesterday's low. What we'll see so far is that prices found resistance at about the 2104 level. That is the 0.618 retracement level. So with regard to price going higher, that is a resistance area right now, 2104. If price can get above that, what you should expect is price to move up to about 2109, and that would be your 0.786 retracement area. Now, this is a 2-hour chart that we're looking at, and this is a pretty significant level of resistance as far as its market profiles. And so this chart here, this time frame does not end until noon, so it's got an hour and 20 minutes out here. And so that says it's at 12 noon that it needs to close above the top of that box at 2100.50. Otherwise, it's really just trading. The ES Mini is what I'm referring to, is really just trading into resistance at this stage. But as I pointed out yesterday, to expect the, the expectation, if you're trying to understand, why does the market do what it does, there's so many great tools that we have here at TFNN.com. That seventh inning stretch is also a great tool out there, both at the high and at the bottom. And now the real question with regard to what the market's trying to do, I believe, is just you switch back to get that general look as to what's going on inside of what's going on underneath the covers. New York Stock Exchange price oscillator still below zero. Dow, same thing. Composite, not just yet, but this is the end of day indicator out here. So that's what's going on there. I had a request to also take a look at about BECN, and yes, I definitely will take Bitcoin. Don't know what to do with it, Bitcoin, but I'll take any bitty coins I can get out there. So now let's go take a look at BECN, which is Beacon Roofing Supply out here. And as we take a look at it, it's trading right now at about $28 and change. Let me pull this back just a bit further. This is a daily chart that we have out here. Beacon Roofing, boy, this thing has been struggling here for a bit. So, wow, let me pull this back. Let me put this on a weekly chart first, as we take a look at Beacon Roofing. Okay, so yeah, this thing has had a fairly decent retracement after moving moving nicely in 2011, August in 2011, off the lows out here at 1459 up to the highs on July 22nd out at 4270. Now, this is the weekly chart that we've got. Let me get the volume out here and everything else. See what this might be doing. So this thing really started to break down here the week that began July 7, 2014. And you had that week, there was about 4.2 million shares to the downside. Looks like that's an area where this started breaking down. Are you looking for long, short? Are you in the equity? Please help me understand what you might be doing here inside this equity. Now, if I do take a look at Beacon, and we take a look at a trend line. So that's one thing I'll put on here. What's going on with regard to the trend line out here? It looks like it has broken its downtrend. I'm just going to start that about right here as we speak. So there in essence is a trend line. So it's now broken that, and it's broken it with some decent conviction. Wide-ranging bar out here that took place on February the 6th. Price is up against kind of like a horizontal line of resistance. Here's where it broke down back in July. I think I said we started to see a little bit of a breakdown in this back in July. Oops, didn't mean to do that. Let's put the horizontal lines on the screen out here. So where Beacon's going to potentially run into some trouble is this little gap here that is open. Now, that gap here is potential resistance. If it can close above that, that would be nice and bullish out here. But this is trading at 28.78. Its TAS market profile high. The top of the box, its resistance area, is 30.20. But the real resistance on this is more likely between 31.75 and 32.47. There are a couple of gaps. That's one of them. There's another gap that's just a tad higher, and that's at the price point of $33.98. And $33.98 is really where this thing started breaking down, and that is still an open line of resistance that was tested and rejected back in July 3rd, 2014. So Beacon Roofing, I don't see anything majorly volume-wise, anything like that off the bottom. And it has had a nice run off the lows out here from from January 22nd. Let's do a little count out. Well, give me a moment here to put BECN in here. Let's get a wave count if we can on a daily chart. Give me a moment just to populate that. Okay, BECN. So on its daily basis out here, just real quickly make sure I grab the swing low. Okay, so where is this at in its stages on the way up here? You've got, well, you're in that, okay, so you're in that fifth stage. So if we look at the daily chart, so the information that's provided to us on the daily chart out here is, if we take a look at its TAS market profile, this 2844 level where it's trading in today is a significant level of support. So if you're inside this equity, look for 2844 to hold. You get below 2844, and then a retracement begins. If we take a look at that retracement, let me move that over here to the side. So if we take a look at that retracement, let's blow this up just a tad. Okay, and that retracement from low to high out here so far says you'd move down to about 27.46, maybe even as low as 25.78. So I hope that helps you out. I don't recall who requested that, but that was I think that was Mitch maybe in Boston out there. So that is on Beacon Roofing. Okay, let's go take a look at a couple of other equities out here that are moving in the market. Let's look at Grief Inc., GEF. How would you like, why? Well, I don't know what they do out here. I probably could look and see what they actually do. Let me see. Where's that page? GEF. Let me see. Let's actually see what these guys do. Maybe these guys are grief counselors or something. I don't know. Grief produces and sells industrial packaging products worldwide. The company's rigid industrial packaging and services segment provides rigid intermediate bulk containers. Why do they call themselves Grief? Don't you think, from a marketing standpoint? Hi, this is Steve Rhodes with Grief Inc. It sounds to me like you're trying to deliver bad news. Well, guess what? They're delivering bad news when we take a look at the stock as we speak here today. Here's the daily chart on it. Good grief, Charlie Brown. Take a look at this equity. This thing made a high back here on August the 1st, 2013. It was priced out at about $58. Right now you're at $38 out here. This thing has a swing point low. A little looks like close to a hammer candle, maybe in fact a hammer. No, whether it is or it isn't, it's a high volume low at a price point of $36.88. You're trading into it. That had volume of 1.1 million shares. You've done 345,000 shares as we speak right now. Expect that low to be tested. Will it go lower, Johnny, out here? If we go take a look at that, see where this thing, if it breaks through that swing point, then goodness grief. This thing could go all the way back down to its March of 2009 levels out there. And that is ticker symbol GEF. If it were me, just saying, I might go out and try and change the name on that. All right, we got gold. Goldilocks is moving. She's up $6. Silver's up 15 cents out here. But is there really anything behind that move? Well, it is Full Moon Thursday out here, is it not? And on Full Moon Thursday, this is where gold can become, we can see an initiation move out here. Is it an initiation move to the upside? Well, if it's an initiation move to the upside, gold will break through that descending price channel out here. And likewise, if it is not an initiation move and it doesn't break through that, it's nothing more than a little bit of a bounce inside of a downtrend that it is in out here. So at this stage here, gold not, give me a moment here to, gold not proving itself other than just a bit of a bounce out here. That's what's going on inside gold. The same thing really inside of silver. We go take a look at silver. That's a little bit on the move, up 16 pennies as we speak right now, but it too in a descending price channel. Not until it takes out that the top of that descending price channel will there be anything else going on here? Moment there to clean up the chart. So there, I guess natural gas, maybe they were out with some inventories earlier. Somebody wrote at about 10:30. So it's 10:46. Let's go take a look at natural gas, up 2 pennies out here. In the case of natural gas, it looks like price just getting up to its point of control area, 282. I still don't see any, other than short-term trading out here, I still don't see anything significant inside of natural gas, not until about the end of April out there. If we take a look at, so we've got gold moving, we've got silver moving, we've got some mining stocks moving out here. Give me a moment. Reduce this. So let's take a look at Rand Gold. GOLD is the ticker symbol. You got 207,000 shares, up 54 cents. Hey, it too is in a descending price channel out here. Looks like I've got a lot of lines on this chart. So far, it's trading below the 0.382 retracement and it's descending price channel. No bullish. Shoot. Sorry about that, folks. Let me type something in here. Okay. If we take a look at Rand Gold, what we know about Rand Gold as we speak right now, also in a descending price channel. Now, this thing gapped down with some volume yesterday, 1.4 million shares. That was taken out of swing point that only had 639,000 shares. What else was this thing trading into? Now, it did not make it all the way down to the bottom of that descending price channel, but still close enough out here. No bullish reversal signal inside of Rand Gold as we speak at the moment. Volume today, 208,000 shares. If we take a look at Gold Corp, GG is the ticker symbol, also in that same descending price channel. So it's really kind of easy and nice to be able to utilize this tool to trade these equities out there. Looks like Tom's system is having a problem. Because any breakouts, you're going to see a breakout above these descending price channels. I was taking like a Rand Gold and a Gold Corp out there. If we take a look at Barrick Gold, let's go take a look at Barrick Gold. ABX is the ticker symbol. Let's go see what this is doing. Really just, this is just trading sideways. So in the case of Barrick Gold, no descending price channel, nothing more than just a horizontal consolidation move. It's got some pretty stiff resistance out at about the $13 area. Give me a moment. I'm sorry. I just keep having to clean up my chart out here. So right now we've got the Dow's up 58, S&P is up 5, Composites up 24. Looked at gold, looked at silver, light sweet crude. You know, it's been trading sideways. No reason to really take a look at that. Go back and take a look at the euro. Let's go see what the euro is doing versus the U.S. dollar. Still below that 110, 1.109 level. Needs to break above that to get back inside. Well, it looks to me like the euro still wants to run lower. Hey, this is Steve Rhodes with TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 56, S&P is up 5, Composites up 23. Let's go take a look at some of the sectors inside the S&P 500. Let's go look at the technology sector right now. It's trading out at about $43 even, Stephen. 43.21 is your TAS market profile resistance level. If you can close above that, says you go test the highs from March the 2nd. Those highs being 43.46. If we take a look at its swing point from back here on November 28th, the day after Thanksgiving, 5.4 million shares there. And that was taken out with volume 6.9 million shares back on February the 20th. So, I don't know how you factor in volume of 5.4 million. On the, they've got a swing point that was taken out with volume. That would set up an A to B equals CD to the upside out here. If I take a look at any kind of resistance, any kind of reversal signals, you had a little bear sash candle that took place a couple of days ago, March 3rd, 8.6 million shares. But yesterday, the pullback was with 5.8 million shares. In order for the technology sector to begin to fail, you need to see it close below 42.49. And then the technology sector may find some support at about the 41.88 to the 42.07 level out there. That is the XLK. If we look at the financial sector, the XLF, that's trading up 10 cents, 4 million shares so far today. This also has been really just trading sideways out here, but resistance really at the 24.51. The real resistance is the price point of 24.60 out there. And that is inside the XLF. If we look at the XLB, the healthcare sector out here, that is on fire, trying to take out its most recent, well, it has. It's trading above its most recent swing point from March the 2nd. That had 6.7 million shares, and my goodness, you've done 3 million shares in only an hour and 26 minutes of trading. strong like a bull out here. Now, in the case of the healthcare sector, its December 8th swing point had 5.9 million shares, and that was passed with 8.2 million shares. So the healthcare sector could really be on fire out here. The healthcare sector, the XLV, has an A to B equals CD to the upside that could take price up into the 79.54 type area. That's what's going on there. Let's take a look at the energy sector, the XLE. Out here, the energy sector continuing to test and reject this little breakout gap, which had 47 million shares on February 3rd. We have now seen two tests of that area that had volume of 47 million. It was tested with 17, and then yesterday was 16 million shares. So the energy sector, the XLE, does not have enough to continue the crack to the lower side. If you get another test today, tomorrow, of the price point of 77.89, and it holds, you've got some pretty decent support. What you'd really like to then see is it get above 78.81. That would say price could run up to the 82 mark, probably 82.43. All right, in summary, what are we going to be looking for? Folks, at the end of the day, if you have access to it, if you can find it, you want to take a look at net advancing issues inside the New York Stock Exchange. If you see 977 or more, the sellers will have fumbled the ball, second down and second down and 5 to go out there. It will have fumbled the ball. If it's less than 977, it is still the sellers, and we've just seen a bit of a counter trend rally in a retracement mode out here. Inside of the composite, and we'll just leave it as simple as that. We'll leave that with the New York Stock Exchange. So, folks, if you're off to start your Thursday, as always, thanks so much for joining us here at TFNN. Stay tuned, because we've got a great lineup for you. We've got our man Basil Chapman, then we've got Larry Pesavento, Daryl Martin, David White, Tom O'Brien, and Andy Heck to take it on home. So, folks, have a great Thursday. Look forward to seeing you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.